Hey guys, what's going on? It's Lewis here with Crypto Elite. Sorry, no picture of my face today or no video of my face today in the corner of this video because my camera has been acting up a little bit lately. But I am going to do a market update video right now. It is September 10th. It's Saturday, 6 p.m. Instead of going out, going to the pool, doing whatever, doing a market update video for you guys. And I'm actually pretty stoked because even though I said that I'm out or I'm quitting or whatever in the last video, you can't quit. Come on. Once you're in crypto, if you're in it, you're in it. This is forever, you know? And I've actually been working super hard on my course and on a few other things. And I have that in my previous video. So you'll see that in the video right before this. Everything that I'm working on, it's in the first 5 minutes of that video where I go over market structure and order blocks and all that. So if you want to look at that, go look at that. I think it's really cool. Also, as I talked about in my last video, I am going to be putting out educational content as well. So just expect a lot of educational content coming at you. But for right now, we're going to go into the market update video. I'm going to try to make this as concise as possible, under an hour. And then eventually we're going to keep on going, and I really want to make as many videos as humanly possible. I want to make videos every single day. It's just, it's tough, especially when you're working on, other things. Like I'm working on making the PDFs for my course. I'm working on making videos for TikTok, all this other stuff. So we're going to get into this right now and let's do it. So it is September. It is September 10th. This is the monthly chart of the crypto total market cap of all of cryptocurrency. All right. Just a recap. We came down basically from, it was right here, about $760 trillion, $761 trillion. Sorry, I'm idiotic. $761 billion back in 2018. And we fell all the way from $761 billion all the way down to, I believe the low was $91 billion. That's insane. $91 billion in December of 2018. And that was basically an entire year from December / January all the way up to December. So if we have 1 year looking out, it is only 1 month, 2 months until the 1 year anniversary of the previous top. Maybe the bottom will be somewhere in November. If not November, maybe December. And so that's really what I'm thinking. I don't know if that's necessarily what I'm thinking, but I will. I'm already dollar cost averaging right now, but I'm going to be doubling up my dollar cost averaging, if not tripling up my dollar cost averaging amounts every single day once we get into November and December and that area. Or maybe we'll just shoot up this tomorrow. Who knows? This is why we do market update videos regardless. And this is why you should have multiple accounts. One account with your HODL portfolio, one account with your actual dollar cost averaging portfolio, and then trading accounts. And I explained that in my TikTok, so you should go watch that as well. Let's get into this. Taking the fib from the bottom to the top, you could see that we hit the 61.8, and then we hit the 78.6, and we basically bounced off the 78.6, and we never even got back up to the 61.8, which normally we do get back up to 61.8, but didn't even bother to get back up there because we had this huge cascading liquidation event happen with 3 Hours Capital and Celsius and Voyager and all these other companies that went belly up. So we're basically in this area. This is what I'm thinking. This is what I'm thinking overall. We're in this area right here where we just experienced a huge liquidation event from all of these companies and hedge funds going belly up and losing all of their money, right? So what will it take for this to happen? What will it take for a big spike up to happen? A real one to happen. It would take outside sources to come in. It would take average people, average Americans, average Europeans, average everyone from across the globe, along with multi-millionaires or billionaires or whatever, to continually pour money into the cryptocurrency ecosystem in order for the crypto market cap to have another huge bull run, just like how it did here, just like how it did back here when all of the new people who were just average people started pouring their money into cryptocurrencies. That's what created this. That is what created this. So logically, think to yourself, this is what I'm doing. are we going to have new people coming in? What's the catalyst of new people coming into the cryptocurrency space and having the total market cap surge up, back to all new all-time highs and beyond, right? What is how is that possible? I don't see how that's possible at all with rising inflation. Although inflation is supposed to go down with the Federal Reserve actually tightening inflation numbers and everything. So that might be a good thing, but there's still the war in Ukraine. There's a possible war with China. China is defaulting and going down with a lot of their debt thanks to the crisis that happened there with the real estate. There's a lot of institutions, especially in real estate, are continuing to sell. We haven't even had the real estate pop yet. Things are definitely going down. Prices are going down, but we haven't seen that huge crash like what we saw in 2008. And I think that there's a big possibility of some type of huge crash to actually happen. So yeah, I wouldn't want to be all in the crypto right now at all. I'd want to have a lot of cash on the side. And that's exactly what I preach. And that's exactly what I'm going to continue to preach. And as the prices are going up, I have sell orders continually. I just have, a sell order every single percent move up that Bitcoin goes. I have sell orders to just sell. I have no idea how high it's going to go, but I highly doubt it's going to go past 28,000, to be honest. Maybe 30,000, 31, 32 at the absolute max. But I don't even see it going. I don't really see it going up there. I'm just saying happenstance, random situation, goes up to 32K. I would want to be all out by then, because given the macroeconomic situation and what's going on, I would think that we would come back down, even if we hit $32,000, and we would come all the way back down and breach the lows of 17K and reach that $14,000, $12,000 number, if not lower. So yeah, that's my overall thoughts on the market. And so with saying that, let's look at some actual, technical indicators and some technical stuff. First off, if we take the Fibonacci from the top to the bottom, and I'll extend it out a little bit, you could see that the 38.2 fib, which is where I would think that we would come up to if we did miraculously have an insane surge, is $1.618 trillion. So if it came up to here, I would absolutely want to be out of everything. Okay. I don't know if it's going to come up to there, but that's just what I'm thinking, because let me check this out. KNC perp hitting resistance. Just got a alert, as you could see. Damn, what's going on with KNC? 20%, 30% right now. All right, so let me actually pause this and make some trades right here for this, because I want to short this. So give me 1 second. Okay, so now I'm back to the actual screen, and I want to go over a couple other things before we get into actual Bitcoin and Ethereum, stuff like that. First thing I want to go over is the other than the total market cap, which I just did, is the 100 minus BTC dominance. So this is the altcoin dominance. Look at altcoin dominance. Look at where altcoin dominance is right now. So if you look at altcoin dominance, if you look at the dominance cycles of altcoins, back here, this was January of 2018. This was the all-time high of the altcoin dominance. As soon as it reached the all-time high, obviously, it fell, and that was the beginning of the bear market for alt. Then it had this nice bounce, and this became the new major resistance area. So remember back in May of 2021 when we had the basically bear market of altcoins, and all altcoins just fell drastically? Yeah, that's what happened right there. And then I'm sure, and then this was actually, this right here, this was November, December, January, and altcoins were getting absolutely decimated in these times. But for some reason, the altcoin dominance was still stagnant and it was still moving up. This to me made absolutely no sense. This made no sense to me. Right here, we did have, that first rally, that first bounce of the altcoins in this time period. So this made sense. But the fact that even in December and January, altcoins dominance levels were still up didn't make sense to me. I think this is because so much new money was creating so many scams with altcoins or something. I don't know. But regardless, that's what happened. But I'm still, and so I don't really use this 100%, but it definitely does add at least a little bit of confluence to my trades. And right now we are in this resistance zone for alt. So for altcoin dominance. So that means if altcoin dominance goes down, then altcoins should go down in value. They should go down in price. And or Bitcoin could surge up in price and altcoins could surge up in price, but Bitcoin will just outperform all altcoins. And that is one way to have this go down. And so that's where we are right now on altcoin dominance. And then for Bitcoin dominance, Bitcoin dominance, we just had a wick below the previous lows on the Bitcoin dominance chart, and now we're closing up above the lows. That could be a swing failure pattern. And if that's the case, then that means that Bitcoin dominance should move up, and Bitcoin dominance moving up, looks like this, while altcoin dominance moving down should look like this. So typically speaking, when this moves down, the market crashes. That's typically what happens. And when this moves up, the market crashes. That's typically what happens. So that makes me very worried about the market as a whole, unless, and this is a big if, Bitcoin and the market as a whole moves up. However, Bitcoin outperforms everything, and that is a possibility. So regardless, I would most likely probably want to be in Bitcoin if it more than anything, because if Bitcoin dominance is going up, that usually means that Bitcoin is that means that Bitcoin is outperforming most alts. So with saying that, let's actually get into Bitcoin. Let's do it. Let's go into Bitcoin. I'll go over some big picture stuff and then we get into the smaller picture things. First thing, remember what I was talking about with the total market cap where I said, it's been almost a year and that was the bottom? Well, I plotted this out on Bitcoin and it was always nice to get reminded of it, which is that from 2013, November 2013 was the actual top, just like how November of 2021 was the actual top this cycle. And the bottom ended up being December of 2014. So 1 year and 1 month later, that was the actual bottom. And that was 396 days later. So 396 days later, and the entire Bitcoin fell 85%. Okay. And that was the bottom. Then we had 2017 come around, huge cycle up. And December of 2017 was Bitcoin's top, and Bitcoin's bottom for that particular cycle was January of 2019. From December 2017 to January 2019 is, if you could take a guess, 396 days, same as this one, 396 days, and it dropped 82.8%. So if we take the top right here, November of 2021, and we extend it 396 days, that gives us December 2022. So that gives us just a few months later, a few more months for the bottom to actually form, if it forms the same way that it did back here and the last two cycles, basically. And that's why I am not convinced yet, because I would much rather go in December of 2022 or January 2023, somewhere around this time period down here. I'd much rather do that than go all in right now, because I do not think that this is the bottom, and I do think that these bottoms, that the 17,605 bottom will be ran, and I do think that we will come down to the 88% retracement level, just around $14,000, and this is the institutional buying area at $14,000, or the 88%. Sorry, my phone just went off, and that's what I'm thinking now. And honestly speaking, things are so shit in the real world that, economically speaking, that I would not be surprised to see us come down to 10,000. And you know what? Crazy as this sounds, wouldn't be surprised to see us come down to 6,000 before bouncing back higher. Wouldn't surprise me. It wouldn't surprise me, because what if some regulation comes out against crypto or even for crypto, whatever, regulation comes out. Regulation scares people. Huge wick to the downside, followed by move up, like new bull market to all-time highs and beyond, right? But the regulation, I think, will scare people, and that's why I'm still very hawkish, as they like to say in the economic world. But regardless, there's still money to be made, so we could just play level to level from this point and see where that takes us. So what I'm looking at is, I'm looking at the range right here. I'm looking at this range, and I'm looking at what's going on within this range, right? So this is the monthly Bitcoin chart, and we have July's range, where August went above, it swung above July, and then closed all the way down here, and then September fell down to the low of the range and swung above it, it, and now we're right here. So we are in the middle of the range right now, and this is on the monthly chart. So let's go down to the weekly chart, see if we could figure some stuff out by doing that. All right. Okay, so you can see I wrote down here, this is the end of September. I said October is generally bullish, so buying may be a higher probability because based on previous months of September, like 9 times out of 10 or something crazy like that, September has been a down bearish month. So that's why I'm very wearisome about buying in September. However, if you're just strictly basing everything off of technical analysis, then you can still buy and you can still sell and you could still do whatever you want to do and trade and base it off of TA and base it off of basically logical thinking and try to find good plays. So that's what I'm doing. That's what I'm trying to do here. So I will get rid of this. Let me get rid of this actually. Okay, so firstly, we have the markets that look, actually, hold on one second. Okay, basically what I was looking at was that on the weekly time frame, you know, we're in the middle of this range, right? But let me get rid of this. We're in the middle of this range, and so like where I want to look for opportunities are at the bottom of the range, at the top of the range, or somewhere in the middle of the range. So knowing that, what I want to do is go down into the lower time frames and check for certain things that are happening. So let me go down. I'm going to start off on the daily, and I'll continue to go down from there. So let me do a little bit of analysis, and then I'll be right back. Okay, so first thing that I notice on the weekly time frame, on the daily time frame, is that we are in this resistance area, and you can see this was the big resistance right here, and then we had a bunch of daily swing failure patterns right above it, and then we fell down, obviously, to make the equal lows this low down here. Going down into the 12-hour, what I noticed is that right here, this move up was the down move. This move up was the last up move before the down move that broke this market structure right there, right? So when this candlestick happened, this huge candlestick happened, turns this original bearish order block into a breaker. So now if the price comes back down here, I'm not saying it will, but I'm saying if it does, this right here is a very, very key point that I would want to get in and, you know, target here or target the range highs, something like that, right? That's what I know, is that if the price comes down here, this is where I want to get in. Another thing that I know is that this was the resistance. So there's a lot of people that want to get out right here. And I'm sure there's also a lot of people that are selling, they're probably selling right now. They're probably selling within this area, probably right around here, right? They're selling this whole area, and they probably have a lot of their buy stop liquidity right up here. So probably right in this area right here. So actually, let me just plot that out like this, and I'll label this as, or I'll just leave it red. So this is the resistance, and this is where all of the people who are selling are putting their stops. So if I was the market maker, I would probably want to spike it up here, grab all of these people's liquidity, and then spike it back. If we get a spike up into this area right here, I would look for stuff like this. I would look for something like this, right? And that would sort of be my confirmation to put on a short position, where I'll put a short position on here, and I'll have my stop loss right there, like right here, like right above this high. Okay, you could put a sell position on literally right here at this line, and with a stop right here. But typically, if there is shenanigans, I don't know what else to say. If there is manipulation or market makers doing their thing, they'll spike the price up first before shooting it back down. And considering the fact that Bitcoin dominance is right here, and and obviously altcoin dominance is right here, and what the market tends to do in these areas, it tends to go down. Like, it's been going down, the market has been going down, right? It goes up, the market goes up. It goes down, the market goes down. Same thing back in May and all that other stuff. That lends me to believe that they would want to spike the price back down. Also, you could see the indicators, they're super overbought. So it's not really the safest thing to go in to just like buy right now with the indicators so overbought. On the 12-hour, on the daily, they're getting there. They look like they have a little bit more room to go, but they're definitely in this overbought territory. I mean, maybe if the RSI was up here, but the stochastic RSI was down, then I would be more prone to say like, okay, maybe I will buy. But yeah, the indicators are pretty bad, not gonna lie. And also, if I take the Fibonacci, and let's say I take the Fibonacci from the bottom to like, where can I take the Fibonacci to that will set this area up to be an optimal trade entry? And that's 22,873. That's pretty much all the way up here. But if we get somewhere, let's say down here, that would give us, I mean, that still lines up with the close of candle right here, with this candle's close at 19,964. Could do something like this and think that this is going to happen. I don't know though. I don't know, because it could literally, the price could do something like this and come up, and then come back down. Everyone enters their shorts, pops back up, and then pops back down, and then shoots up. You don't really know. You sort of just gotta plan for it. This is what I'm seeing. This is pretty much what I'm seeing on the 12-hour time frame. So let's go down to the 4-hour and maybe a little. Oh, look at how oversold this is. Overbought these are. It's like that doesn't really seem good. Like, you want to buy when things are down here. Like all of this down here, this was really good. And same thing with this is about to cross down. That's not a good sign. So at least on the 4-hour, I would not buy. There's no way I would buy given these three indicators right here and the fact that we're at resistance. Remember, if it's at resistance, don't buy. If it's at support, look for buys. Okay. So that's why I'm not going to buy right now. Even though someone with millions of dollars could come in and push it up literally all the way back up to $25,000. I don't care. I'm not going to buy right now based off this. That's why I have my other account, which has my dollar cost averaging account where I just dollar cost average into it and I sell on the pops up, because I've been dollar cost averaging this entire move down and I've been selling this move up, and I'm selling some right now. And if we move up, I'll sell even more. That's pretty much the thing. So let me look at this 4-hour chart, see if I could see anything of significance on this. Okay, so I didn't really see too much. However, I did take the Fibonacci from this top to this bottom and noticed that the 61.8 happens to fall in line where the box was. And so it's a little bit above it, but so I'd probably lift this up to here. I would say that 22,700, this is, if it reaches here, that would be the top. Because this is the 61.8. Plus, there's massive amounts of resistance right here. Previous support turns into resistance, and it was never retested. So I would probably put on a short position as soon as it touches $22,669. And I would assume that it would do something like this, and then who knows? Maybe it'll come back up, or maybe it'll just do something like this and then fall back down, and then we make the new lows that I'm expecting. That's what I'm thinking. I'm going to look for stuff. I'm going to look for something like this to happen. And hopefully get in right on something like this. I'll get in right here, stop loss up here. If this doesn't happen, but this could happen. This could happen anywhere in this entire region. Or if the price, a Delphi medium hit, sorry, I'll have to check this 1 second. Okay, yeah. Or if the price does something like this, right? And it breaks market structure right there. Let's go down to the 1 hour to get a little bit more. If it breaks market structure right here, then I would get in on a retest. So basically looking at market structures and order blocks and things like that, this is what we can confer of what's going on right now. We could confer that this is what's happening. It's making higher lows and higher highs, right? It's continually making higher lows and higher highs. It's on its way to making a new high right now. So until the previous swing low gets broken, until this gets broken, or if it does something like this, and then this one gets broken, it doesn't matter. One of them has to get broken. Once that gets broken, then that will be the confirmation for me to enter short positions somewhere on a retrace to come back down. That's what I'm looking for. That's what I'm going to be looking for, whether it's up over here or really anywhere within this zone. So now that we have that out of the way, let's go on to Ethereum. Okay, so now I'm looking at Ethereum, and we're going to start off on the monthly chart for Ethereum. So looking at the monthly chart for Ethereum, what can you see? You could see that we have the bottom, swing bottom to the swing top, 78.6. It actually fell right below 78.6. I'm honestly still thinking that 600 to 800 Ethereum is going to get hit. I don't know why some people are saying, oh, you didn't buy Ethereum at 800. It never hit 800. The low was literally $881. So it never hit 800 bucks. But I'm seriously still thinking that the 88% retrace is where it's going to retrace to. That's what I'm thinking. And let me just do a little bit of analysis right here. How long from the top, before I went from the top down to the actual bottom, the low was 83. I think this was the low right here. 334 days from the top to the bottom, 334. So how many days has it been so far? Let's ask that question and let's look at this. It has been 304 days. So another 30 days to go. Before we hit our, actually, let's go down to the daily just to make sure we get it, more accurate. So give me 1 second. Let me go back over here. This was right there. That was the top, and the bottom was right here. So 336 days. Wait, was that exact? No, I think 356 days was Bitcoin's. But yeah, 336 days. So not too far off. Right now we're at 305 days. So there's still 21 days to go, or 31 days to go. And so basically sometime in October 12th, maybe that will be the bottom, October 12th. Who knows? Like I said before, we'll do range to range, and then I will call this a night, whatever, call this a stream, call this a market update video. So what I do, I look at this and 1, 2, 3, 4, 5, 6, 7, hold on a second. 1, 2, 3, 4, 5. Oh man, that's a little worrisome. Well, it's worrisome if you're short. If I'm just looking at this, I just noticed wave 1, wave 2. No, that doesn't make any sense. Never mind. I thought for a second maybe 1, 2, 3, 4, 5, but that doesn't make any sense either. Okay, so scratch what I was just looking at. 1, 2, 3, 4, 5. This might be on the fourth wave. on the monthly chart. Where is it? This might be like this all the way up to up here somewhere. Maybe I meant right here. Maybe just like 1900, 2000, whatever, and then back down to 600, something like that, and to complete the 5 waves down. I'm not really sure, but this is all that I see is that, or all that I know is that on the monthly chart, if you take the Fibonacci from the last swing high to the last swing low, 38.2 is $1,911. We actually went above it and then came back below, and the next one is 2290. But usually the monthly charts, I don't know, on Ethereum aren't the best. The weekly charts usually are a lot better. So I'm just looking at the weekly chart now, and I'll swing high to swing low. 61.8 is right there, 50% is right there, and the 38.2 is right there. So we're coming up to the 38.2 at 1900. Still have a couple 8%, 7.5% to go, but it's getting there. And so this is the weekly chart. Let's go down the weekly chart, check this out. All right, let me see if there's anything on the weekly chart, and then I'll go down to the daily, and then the 12-hour, and then the smaller lower time frames, and see if there's anything that I could see. All right, well, the only thing that I could see is that the Fibonacci did not work on the weekly time frame, because I had huge buy orders in at $1,410, $1,014 and $1,415, and it never hit. It got to 1423 and then 1420. So 1420, but this makes me so sad. So fucking sad. Because I front ran the 61.8, which is right there, 1,397. I was like, no, I'm going to get in at 1,415 because it's, 15, 16, 17, 18, it's $18 above this. and I still got front ran. It makes me so sad. Luckily I did get in. I did end up getting in around 1,500, somewhere around there. And I sold it maybe 16. I sold it like somewhere like right around here. So didn't get everything I wanted, but at least I got something. And so taking the range from the low to the high, you can see that we had the 50% right here, and it went below it and then went back above it on the weekly. Maybe on the daily it ended up, yeah. So when it went below, the range on the 50 on the daily chart, and then it closed right here, and then it popped back up, that was the signal to get back in. And then where would you get in? Well, if you're using the daily, you would get in right there, because this is the last down candle before the up move that broke the market structure. Actually, wait a minute. This didn't really break the market structure on the daily. You'd have to go into the 12-hour, and I guess you could say that this candle broke type of market structure. This isn't really like a market structure. It's just down, you know? So technically speaking, we sort of just broke the market structure right here with this candle. So now that we broke this, like, where do you look for? Where do you look? And this right here now is going to be like 1700 area. It's going to be a support, or at least it should be a support. And yeah, so actually going down, or going to the 12-hour, you can see there was a lot of support back here in this area, and we crashed through it. And this was, I don't know what this was, because we had, resistance, and then it turned into support. And this support should have held, like, given the SR flip, what the SR flip is supposed to be. But obviously it ended up not holding and then turning back into resistance. And so now that it popped back above it, this area is technically support now. So we should do this, and you could now turn it into a support area. So for Ethereum, this is the support, and basically if it comes back into here, this could be an area to long. But this is just like Bitcoin. Look at these oversold indicators. Like, do you want to get in on the oversold indicators when it's already right above the support? Let's go down to the lower time frames, because remember also, this was big resistance. So this area right here that it's in right now, like this whole area, this is basically, there's a lot of buy sell stop liquidity up here. So let me do this real quick. Sorry, I meant to say buy stop liquidity, not sell stop liquidity. So there's a lot of liquidity here. So we're gonna have to see how this develops. I wouldn't necessarily want to get into this right now, because it's I don't know, it's sort of just like jumping on the unless you want to just jump on the comet or jump on the train. But yeah, it's so overbought. It's so, like, I would get in on a retest. You could do this. You could get in on a retest of the supply, of the support, stop underneath of it with target range highs. It's actually a pretty solid trade setup. That's over 5R. It's over 5R. So I'll probably do this. Yeah, I think this is what I'll do. This has shown that this has been the big resistance zone, and then turned into support. So I would probably put this trade on. Either that, or I would look for, I don't know, something like this to form. And if something like this forms, then that would mean that this right here is the break of this market structure. And then I would try to get in on a short position on a retest right here. And I would, I don't know where I would target, probably somewhere down here, and then for target 1 and then target 2 down here. But I have a feeling that Ethereum, I don't know, Ethereum's probably gonna do well going into the merge. I mean, it already is doing well going into the merge. I wish I just held, just bought, because I bought down here, and I wish I just like held it, and that would have been a lot more fun. But it is what it is. And so now that we're here, we are right above this big support, and you could put on a trade. You could put on an SR flip trade. That's what you could do. Or you could look on the lower time frames, and you could look for bearish order blocks to form in this zone. And if bearish order blocks form in this zone, then you get in on the retest of them, and then, target wherever you want to target, as long as it's over 2R. That's my criteria. And so those are the ifs and the thens. I'm going to end this video right now and possibly go edit I need to edit this video. I need to edit another video. I need to do a bunch of stuff. And so I'm going to go ahead and throw this up so I could get started on some more stuff. And hopefully you have this video before the price action actually formulates. But regardless, I'm going to do this right now, and then I'll see you in the next video. Hopefully my camera will be up in the next video as well. So thanks again for watching. See you in the next video. Peace out.